We're going to get right into it because we're a little behind on time. Airtel Africa is where we're going to begin with telecommunications on the African continent. The company has released its earnings, revenue climbing 24.9%. This is its first quarter 2026 based on its financial calendar from April to March. So Q1 2026, I know we're in 2025, but that's just how the calendar works. Earnings before interest, tax, depreciation, and amortization up by almost 30%. Profit after tax coming in, and look at this, 408% growth. Mr. Sunil Taldar is the CEO of Airtel Africa. He joins us from the United Arab Emirates. Good morning to you, sir. Thank you so much for being with us. Can you talk to us about the triggers behind your financial performance for the first quarter?
Morning. Thank you very much for having me. We are pleased with our quarter one results because if you look at the structure of the growth is very good. Overall 24.9% revenue growth with a 9% increase in our customer base and about 14.5% increase in our ARPU growth. So that's the structure of the growth, which is what is delivered this circa 25% growth. And we've seen growth across all our business segments, which is mobile business, circa 24% growth. Airtel Money continues to grow at about 30% growth. And all across the market segments, which is Nigeria at about 49% growth, East Africa at 20%, which is a consistent performance, and Franco at 16% growth. I think all of this is a combination of a very simple strategy, which is what we have, which is what we refresh. It's a customer-centric strategy where we are focused in delivering great customer experience, which is backed by a very solid investment that we have in our network, in our tools and capability. And finally, it is a great execution by our teams on ground. And I think it's a combination of all these three things is what seems to have delivered this growth for us.
For your data revenues, when we look at the revenue breakdown, data climbing by about 34.1%. I mean, I think, 539 or so to $503 million. Are you leaning more on data? Is that the trajectory that you see going forward, where data outstrips voice and you're going to give, I guess, more product offerings around that?
See, this is a natural evolution of the telecom market. This is where Africa is right now. Because if you see what is happening is our base has grown by 9%, but our data customers have grown at about 17-18%. So which is almost 2 times the rate of growth of overall base. The second is, as customers upgrade from a 2G phone to 4G phone, their data consumption goes up. And finally, as the African population, our customers, they adopt more digital life, which is what we are enabling. We will continue to see the higher consumption of data, which is what we've seen this quarter as well. If you look at our overall voice consumption has grown at about 1.4%. However, data consumption has grown at about 26% or so. So if this is the data consumption, it's a function of more customers upgrading and customers adopting more digital lifestyle and therefore consuming more data, whether it is on entertainment, education, transactions, commerce, all parts of life. We are now seeing adoption of data, which is what seems to be driving this growth for us.
Airtel Money, average revenue per user up by 11.3%. Total, your value of transactions, I think 162 billion. That's jumped, I think, about 35%. Users growing by double digits. Talk to us about the rationale behind the IPO and wanting to spin it off on its own next year. Is it due to the growth that we're seeing?
Yeah. See, if you look at Airtel Business is a very, very good business for us. Airtel Money is a very good business for us, growing at 30% consistently. It's a very profitable business for us. And what we have, some of the numbers that you called out, we are seeing very smart growth in average revenue per average transaction per customer, which is growing in smart double digit. Base growth is growing at about 16%. And most importantly, what we're seeing is, more and more customers adopting to digital ways of working, and therefore their use cases, whether it is bill payments, transactions, merchant transactions, are increasing on the money side. So it's a very attractive business for us, and the right strategic path for this business is actually to go for IPO, which is something that we had committed to the markets. When we declared our financial results, which is last quarter, we, given the market conditions, what we had said that we will list this business by first half of FY26 calendar year. So we are right now working towards, there's a lot of preparation which is going on to list this business by first half of next year, subject to market conditions.
Great stuff. Your capital expenditure outlay for full year 2025, you're looking at 725 to 750 million dollars. Is that mostly going to be based on, I guess, network infrastructure? What's going to be behind that capex outlay?
Yeah, actually, I'll build on the point that you made, which is to say data consumption is growing. The data consumption is growing because we are also facilitating, as an industry and particularly Airtel, we're making huge investments in creating capacity, data capacity, whether it is in our existing sites infrastructure or expanding coverage. So that is what is leading to about 725 to 750 million which is the guidance that we have given for capital investment this year. This includes significant investment in our networks to expand coverage, to build capacities. And there is some investment that we are making, which is a sizable amount of investment that we're making in building data centers. There are 3 data centers that we've announced, which is currently that we are working on. There is one of the largest data centers in Nigeria, is what we announced about a year and a half ago. The construction work is currently on. That is a big investment that we're making. There are other 2 data centers. One is in Kenya. We've completed the land acquisition. The work will start very soon. And the third data center that we're looking at is in DRC. Because, what we see with this entire AI wave and the upgrades from 2G to 4G data consumption, Africa is at this point in time offers us a huge opportunity. And we want to make sure that we're making the right investments. So one is on network. Second is on data center, which is making sure that we are ready for this entire explosion, which is what we're expecting coming out of the AI wave, which Africa definitely will benefit from. So those are the investments we're making.
Certainly. Your stock, I know you're listed in Nigeria, but looking at your stock on the London Exchange, about 7.5% in early trading this morning, 68% year to date. Your share buyback program, it's in its second tranche. I think you've done about 55, it's valued at about 55 million or so, and you said that you bought back about 7.1 million shares as of the end of June. You still feel the shares are undervalued, and will there be more buybacks going forward?
See, we announced this, as you called out, we are in the middle of this, the second tranche of share buyback, 55 million. We've returned about 17 million so far. This actually reflects the confidence that we have in our stock, in our business, and that's the reason why we announced this share buyback. Once we complete this tranche of share buyback, it's then a board decision to decide to talk about the next tranche of share buyback, which will be a function of our overall capital allocation strategy, and as long as we meet all our growth requirements, and to also deliver better returns to our shareholders. So it's a combination of these 2 or 3 things. We take into account all of these 3 factors, and the board will then decide our next decision on further share buyback. But we remain very, very confident of future prospects of our business, and most importantly, the opportunity in Africa. And if you look at, you just looked at our share prices gone up by about 68% YOY. It's also a reflection of the overall, macroeconomic environment, which is very positive in Africa, particularly in Nigeria. There is good news coming out of Nigeria. The currency is stable. So sum total of all of that, if you look at great, opportunity from a telecom point of view, Africa is the best place for any telecom operator to be kind of working in. If you look at the political environment and the overall economic environment is positive, young population, and then currency is stable. We've demonstrated great ability to continue to invest and execute. So all these factors point towards a very bright future for our business in Africa. So therefore, we remain confident. And then we will see, I'm sure, if all these things continue to be what they are, no reason why share price will continue to, to remain, the investor will continue to remain positive about our business.
All right. I know you're a busy man. I just want to squeeze one more question out of you. Talk to us about your debt localization program, because I think 95% of operations now are in local currency. I mean, are you aiming for 100%? And are you turning your back on foreign currency debt for good?
Now, see, this was a strategic call that we had taken, that we will localize our debt in local currency, because there have been instances of currency kind of turbulence or devaluation that in fact in Nigeria experienced about till last year. Right now, the currency is more stable. So this was a strategic call that we had taken, that we'll move our debt to local currency. This was a hedge against a little bit of currency kind of fluctuations that we experience. Similarly, what we've also done, other than the debt, is we've also made sure that most of our operating expenses are also in local currency. So, our dollar-denominated operating expenses is about 15% of the total business. So that's something that we've done, and it seems to be paying off. And that was a strategic call that we took.
All right. The CEO of Airtel Africa PLC, Mr. Sunil, thank you so much for joining us on the Arise News Global Business Report. We really appreciate your time, sir.